All right, so we've had a pretty good month here, guys. If you look back on some of the videos we've done, we've talked about buying that holiday pattern much earlier than everyone suspected. And guess what? If we follow our rules, the holiday pattern is actually ending right now, which begs me to ask the next question, and that is it time to sell the news? And so in this video, I want to talk about how to sell the news safely. We'll look at the overall markets. We're going to look at FANG. We're going to take a look at the worst stock, technically in FANG, and how to sell it and sell it safely. Hey guys, welcome to Tom's Trading Room. Glad to have you here. You know what we do. We show you how to spot opportunity and create alternative trades other than simply buying and holding. All right, now I want you to do me a favor right now as a little holiday present to me. Hit that like button below this video. If you do that, then it's going to help support our channel. And also, if you smash that subscribe button next to it and ding the bell, you'll get videos just like this every time I upload. All right, so let's get to work on selling the news. So here's a chart of the S&P 500, and I want to put it up because the overall market finally moved to new highs last week. If you remember this area here, this is when Pfizer made that announcement that it finally had a drug that had 95% efficacy, and then since then, all or a lot of other pharmaceuticals have jumped in, and biotechs have jumped in and made claims of their own. The markets finally reacted to the positive side. We're up to new all-time highs again. But I got to tell you something. Most of FANG hasn't participated, and it's actually slowed this group down. Why is that group slowing down? It could be a rotation. It could be sell the news. It could be value becoming more of a play. It could be all of the above. Let's take a look at each of the 5 FANG stocks and talk about how we can sell this news, this rotation for profit. So here's Facebook. Now, what has Facebook been doing since the news a couple of weeks ago? Well, Facebook was actually in an area that was close to 295, and it has dropped down, and it's started to consolidate since then, and has actually consolidated in the 275, 285 area, trading right now around the $280 share level. How about Apple? Apple should be moving higher. And indeed, Apple has been moving higher. We've been talking about this one over the last 2 weeks when it was down around the 115 area. It did break above and get above the 120 area. And in fact, is trading above the resistance down here around the 122 level, but just above it, basically. It has not staged any huge breakouts, although I still hold out that Apple will be above the 125 level pretty soon. Right? But it's far from its highs of 138, which actually happened back around Labor Day weekend. All right, moving forward, let's take a look at Amazon. So Amazon has really tightened up. Remember those old highs at $35.50 a share? Well, those days are long past. In fact, it had highs at $35.50, lows down below $2,900. Then it made a rally back up again and got to $3,500. Then it dropped down to $2,950. And now it's just getting tighter and tighter as the highs are getting lower and the lows are getting higher into where it is right now, below $3,200 a share. Take a look at Netflix. Netflix saw its highs in October as we rallied off of those mid 400s, that 450, 460 area, ran all the way up to 570 and then right back down to the 470 level, which we're seeing as support. What's interesting is that Netflix has got same support and it's got falling resistance, and it broke through that last week. And now it's struggling to find its way as it just moved up to around the $500 level and it's just kind of just fizzled out since then. How about Google? Well, Alphabet, or Google, has actually been the strongest of the FANG stocks as it was late to the party, but then started to create higher lows, higher support levels, and same resistance again off of the news from Pfizer, but came back last week just like the rest of the market and finally saw new highs for the year. So if I look at all 5 of these, I have to say, you take a look, Google is the strongest of FANG. What is the weakest of FANG? Well, to me, it's a toss-up. It's a toss-up between Amazon, which just really hasn't gotten higher. It's more on the low end than it is on the high end. And Netflix, who is struggling with competition, and it's definitely showing in their share price. Now, I want to show you how we can sell these stocks. We could simply go out there right away and we could just sell the stock short. But if you do that, you've got a lot of open-ended risk. So how do we sell short and create a high probability trade that also has limited risk? Now, we do that with something called a credit spread. Big first question for those of you who've never heard this before. What is a credit spread? A credit spread occurs when you sell a higher priced call or put and protect it by purchasing a lower priced option of the same type. So if I'm bullish, then what I'd look at doing is selling higher strike puts and buying lower strike puts. This is a bullish opportunity, and you can actually place these out of the money and raise your probabilities, your statistical probability of profit. On the bearish side, if you think something's going to stay the same or go lower, then what we look at doing is selling the lower strike call. That brings the premium in, and we buy the higher strike call for protection. Each of these would result to a net credit in your account. We're going to look at the bearish opportunity. So let's go back and let's take a look at Amazon once again. Here's Amazon, and I see that Amazon had some highs up here. Now, we could sell a credit spread way up here, but the distance between what you're buying and what you're selling for is not going to be much. And so although your probabilities would be high, your risks would be high as well. I like to sell credit spreads real close to where we are right now in expectation that the stock is going to move in my direction. For that case, we're going to take a look at the at-the-money, all right, the at-the-money calls, and then we're going to look at is buying some protection above. So I want to sell right around where the market is now, and I want to buy a little bit higher of it to create protection. That way, if Amazon goes down, then I'm making money. But if Amazon goes up, I know what my risk is. So here's an option table for Amazon looking at the December 18th options. So this is what we call a bearish credit spread. It uses calls with the same expiration date. If you notice here, December 18th is what we're looking at. We're going to sell that lower strike call. So as the calls get higher, we're going to sell that lower strike call and we're going to buy the higher strike call. So in this case, this is an example. This is not a recommendation. We're looking at the 31.65 as an example to sell. Right now, you can get $71.80 as of the video. The 31.75s, which are 10 points higher, we have to pay $67.55. Now, if I buy something and I sell something that's higher, the net result's going to be a credit to my account. So when I put these two trades together and analyze them using our software at tomsoptiontools.com, by the way, quick plug, free 2-week trial for those of you who've never tried it before, check it out. Take a look at this. When I put this together and run it through the risk analyzer, this is what it's going to look like. It's showing me that if I could get this trade off at these prices, all right, meaning I am selling the 31.65 call for December 18th, buying the 31.75 call for December 18th, that can be done for a mid price of about $4.25 credit to my account. For that spread, that means that I have a total credit of $425. That also tells me that my maximum profit is the credit because, again, if I'm selling this at a credit, I want to keep as much of that as possible. So as it drops, I'm actually profiting from the trade. The most I can risk is $575. How am I risking more than I'm receiving? Well, again, there's a trade-off here because I'm selling at the money. Let's back up a second. See the stock price, $31.6258? I'm selling the 31.65s, buying the 31.75s. If Amazon stays right where it is, I could potentially max out and profit on this trade. It doesn't have to move lower at all. It just has to stay where it is. Because of that, my risk is going to be a little bit higher than my reward. That's the trade-off. This is what it looks like on a risk graph. Again, if Amazon just stays where it is, I max out with my profit. But if Amazon runs up, if it's not done buying the rumor, then I could potentially be on the hook for a maximum risk of $575 per credit spread that I do. All right, so if it goes up, I lose money. If it stays sideways or goes down, I make money. That's how this trade is designed. To place the order, And a lot of you asked me about how to place orders on the video, so I want to go take it that one step farther. This is how you'd place the order with your broker. So notice I've got Amazon here, I've got the call spread, I'm buying to open that 12-18-20 higher strike, selling to open the 12-18-20 lower strike. And again, let me remind you, this is not a recommendation, this is an example. I don't care about what's going on here. I care about the credit in between. So if I can buy to open the 31.75 calls and sell to open 31.65 calls and receive a credit of 4.25, great. If you want more, if you want to receive $5 credit, you would put in your limit order as a credit, and you put the credit in that you want right here. Now, I have this set as a day-only order, but if we were to look at it as a good till canceled, that's not a problem either. Now, how about exiting this trade? What can happen? Well, you could get your maximum profit, or you can get your maximum risk on the trade by the expiration date, or you could look at, for instance, something in between. If you want to potentially get out early, this is one of the exit strategies that I do with credit spreads, and that's called the 80% credit. I like to take in 80% of the credit that I receive. So what that means is this, is that I'll calculate the credit. Let's say the credit I'm looking at is $4.25. That's per spread contract. Calculate 20% of that number, which above is about 85 cents or $85 per contract. So if I put an order in to buy to close this trade, and I put it in at that 85 cent limit, that means, again, what I did was, remember the credit spread that I sold to open? If I reverse the order after I'm filled, and I buy to close these, and I put a debit in of 85 cents, then what I'm doing is I'm allowing myself to keep 80% of the spread. If I buy that back at 85 cents, well, if I sold it at $4.25 and I buy it back for 85 cents, I keep 80% of the spread, or in this case, $3.40 or $340 per spread. Now, consider this. How much money or margin does this take? Well, remember, your margin is calculated as risk. So, it's the difference between strikes minus the credit received. That's the maximum risk and margin the broker should hold from you. In this case, you're talking about $575. What's the most amount of money you could make? Well, the most amount of money you could make would be the maximum reward. In order to get that, you have to hold the spread all the way to expiration. The stock has to be, in this case, at or below the 31.65 level. If that's the case, this whole spread goes to zero and you keep the entire amount. If it goes against you, again, the maximum risk is the difference between strikes minus the credit you received. Now, in summary, again, has the tech rally run its course? I don't really know. No one really knows for sure, but we sure have seen quite a run-up, not only this year, but over the last 30 days for sure. And if you believe it has, then selling the news might make sense to you. Credit spreads allow you to do that with limited risk. And although nothing is a guarantee, I use this strategy a lot when I believe the run is done. Guys, hope you enjoyed the video. Like this video, it helps support the channel. And of course, subscribe to it and you can get more videos like this as soon as they're uploaded. And have a great rest of your week. I'll be back in touch with you soon. Bye now.